Bank stocks surge as profit margins increase on the back of higher interest rates. A new record for rising house and apartment rents. And NASA's bid to nudge an asteroid is successful. It's Thursday, the 13th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. You must be excited about that NASA story.
Oh, I'm thrilled. Partly because when we spoke about it last week and you put me on the spot and you asked me, was this a success? And I said, we're going to have to wait a little bit longer. I thought we were going to be waiting months until we actually knew whether it was a success. And we know today.
It's a success.
That's right. And we'll discuss that in a little bit more detail shortly. I've got a question for you.
Yes.
Sean. In the last 24 hours, yesterday morning, we released our new episode of How Do They Afford That?, which is our other podcast, our new podcast that really kind of looks at how to make your money work a little bit harder for you. And we talked this episode about what to do if your partner is a saver and you're a spender.
Well, Michael, I want to jump in here, right? It's a great episode. It really is. But what happens when your partner's a spender and you're a spender?
That's what I was going to ask you, because there's really a scenario there where it just spells a whole heap of trouble.
Disaster.
Yeah.
Disaster. I don't think the podcast totally covered that.
What to do when you have zero restraint?
Yeah. That's it. It's fascinating. I mean, it's a great show. Ken is fantastic. You're fantastic in it. And, you know, as I said last time, you listen to it and you only need to take one thing away that can actually really make a difference to your financial situation. And I did that when I heard it yesterday, but I must say I'm a spender and Jackie's a spender.
And so really there is no hope for you. So
That's right. That's right. But wow, we enjoy ourselves.
That's right. Yes. But anyway, How Do They Afford That is out now. You can find it wherever you get any podcasts, and we'll put the link in the show notes as well. It's worth it just for the shameful admission that I make during the episode. And I'm not going to reveal what it is now, because it's worth listening to. It is something I find I reveal a lot more about the way I manage money and the way that we approach money in our household. And this has a particularly shameful admission in this episode. So it's worth listening just for that. And it's I think Canna could not believe it when I said it to her. So how's that for a tease?
It is a tease. What I do like, I mean, both shows, you can just sort of see Canna sometimes, or you can hear Canna just going, oh, does he really does he do that? Wow.
Yeah. Yeah. And the worst part is I'll start saying something and just watch the look on her face and go, oh, I don't think I'm supposed to do this with my money. She's really going to judge me. But anyway, It's worth checking out, but we need to move on. We have plenty to talk about today. It's a big show, actually. You've got an interview coming up a little bit later on, and we'll be talking about this subject as well during the program. You're speaking with Chris Bryke from StockSpot about the best and worst performing super funds.
We all have super funds. We all need to keep an eye on how they're performing, and that's exactly what StockSpot is doing, and Chris tells us all about it. But let's just, we'll talk a little bit more in this show. Definitely worth listening to Chris on it, though.
Yes, indeed. That's coming up a little bit later on. But the main story this morning, Sean, bank stocks surged yesterday. Mostly it was because one of the tiddlers in the sector, Bank of Queensland, showed the profit margins among lenders are on the rise thanks to higher interest rates.
Yes, banks are supposed to do well when interest rates are rising, but fears of a slowdown or possible recession have pretty much overwhelmed investor sentiment about the banks. But yesterday was a big day for the sector. Things changed. Westpac's share price jumped nearly 4% yesterday. ANZ rose 3.3%. Commonwealth Bank was up 2.5% or thereabouts. National Australia Bank rose 1.3%. It was because Bank of Queensland released its profit result. Now, its share price jumped 11% after posting a 15% rise in profit for the last 12 months. But it was all about net interest margins. The Brisbane-based bank said home loan growth had come back, but net interest profit margins, broadly the difference between what the bank pays on deposits and receives on loans, it's how banks make money. So that net interest margin had jumped in the fourth quarter. That's all important. Investors have been waiting to see a rebound in banks' net interest margins. We hadn't seen it yet, but it looks like this latest round of interest rate rises, the one since May, are now helping boost banks' bottom line. So share prices surged.
And Sean, this was happening as the Commonwealth Bank held its AGM.
That's right. Chair Paul O'Malley said the bank will need to work with regulators and the rest of the industry to deal with expected hardships from higher interest rates. Mr. O'Malley was actually chairing his first CommBank AGM, having replaced Catherine Livingstone during the year. He said the pandemic showed that banks could engage with customers to lessen the load. Regulators had aided during COVID by adjusting settings to facilitate that sort of cooperation, he said.
Yeah, I love AGMs, Sean, because you get to hear from like the CEO on a range of different topics. Did the Commonwealth Bank CEO, Matt Comyn, have anything to say on interest rates, which I think is kind of what everyone wants to hear?
Well, he did. In fact, he was actually pretty upbeat about the economy. He said the bank expected another 25 basis point increase in rates next month and then nothing for the rest of the year. He said Commonwealth Bank was very confident about the outlook for the Australian economy, but each individual was different, and the bank expects a run of hardship claims as people roll off low fixed-rate mortgages onto higher variable rate loans. Mr. Comyn said the mood among customers is definitely shifting.
And there are a few protesters as well at the meeting.
Yes, there sure was. I mean, the meeting was at the MCG. It was disrupted by a group that just started singing in the middle of the chair's address, which was quite funny. I mean, they got kicked. Some of the shareholders started shouting at them and telling them to shut up. Eventually, they were removed by security. As they walked out, the chair, Mr. O'Malley, said, well, at least they were singing in tune, which I thought was a pretty good line. There was also a bunch of climate change protesters outside the venue as well. That, of course, is about whether the Commonwealth Bank will lend to carbon emitters. The bank said it will lend to carbon emitters, but it does want to know exactly what their plans are to reduce their emissions.
All right. So what happened in local markets yesterday?
Well, the S&P ASX 200 finished the day up just a touch to 6,648 points. As I mentioned, the bank stocks did very well, led by Bank of Queensland, which in fact was the best performer of the top 200. The big miners fell on lower iron ore prices. Woodside and Santos were both off around 2% and CSL dropped 1%. One notable was Mineral Resources. Now, its share price surged on Tuesday after reports that the company had priced out a new lithium hydroxide plant in Western Australia. Yesterday, it fell 3.7%, which was the worst of the top 200, after the company said it had made no decision on whether to build the $1.3 billion plant.
And what about international markets?
I don't want to talk about international markets. You know I'm going away to the US shortly, and every time I check, the Aussie dollar just gets worse. It hit a new 2.5-year low yesterday, Michael, of 62.45 cents. Just in case you're wondering, when you go to your bank app to change money, you're now looking at a number with a 5 at the front of it. Ouch. It's down about 14% this year. I have to stop thinking about it. Meanwhile, the US dollar continues to appreciate against most currencies, hitting a 24-year high against the yen yesterday. Iron ore prices fell sharply. I mentioned that BHP, Fortescue Metals and Rio Tinto share prices fell yesterday. That's on the back of those iron ore prices dropping. Really, it's all about China, the surging COVID cases in the country, and lack of any sign that Beijing is about to relax its zero-tolerance policy is weighing heavily on the commodities price. Brent crude prices were a touch lower and gold was flat.
It's about, 3 and a bit weeks or so until you go to the US, isn't it?
It's going to rebound. Yes.
It's not too late to change your mind and head to Europe or to Japan or somewhere.
Japan seems to be the way. More about that in a moment.
Oh, hey, good tease. You've even got me interested. All right, we'll be back in a moment with the rest of the day's business news. Sean, a new report shows that house and unit rents have reached a new record high across the capital cities.
Yes, that's right. Across capital cities, house rents are up nearly 13% over the past year, according to online property group Domain, and unit rents are up 17%. And while the pace of growth of house rents is slowing, they're actually accelerating for units. It's the highest annual growth on record and the 6th consecutive quarter of rising rents for houses and 5th consecutive quarter for units. Now, that's the longest continuous stretch of growth ever. What really matters here is what it means potentially for house prices. This is the sort of thing that will attract investors into the market, and that could well put some sort of floor under house price falls. Immigration opening up could also get investors back into the market. So it's not good news for people renting. It probably is good news for investors and for people who don't want house prices to fall too much more.
Sean, there are a bunch of corporate deals announced yesterday among some of the smaller resource stocks.
Sure was. Lake Resources said it had signed an agreement to provide up to 25,000 tonnes each year of lithium from its Argentinian mine. As part of the deal, the buyer, SK Onco, will purchase a 10% stake in Lake. Its share price rose 2%. General Motors, the huge vehicle manufacturer in the US, said it would invest up to $110 million and take an equity interest in Queensland Pacific Metals to secure a new source of nickel and cobalt for battery cells for use in cars. Interesting there, it's not a lithium play, it's some of the other minerals needed for batteries. That sent Pacific Metals share price up 17%. And coal company Coronado Global Resources confirmed it's in talks with New York Stock Exchange listed Peabody Energy regarding a potential transaction. Its share price jumped 8%.
Sean, for this next story, I've considered whether it's time to introduce a little kind of siren or a little alarm that goes off whenever I sense that I'm in for a bit of an economics lesson. And I have a feeling I might be getting one because I actually need one on this. Yesterday, Reserve Bank Assistant Governor Lucy Ellis gave a speech on the neutral cash rate.
Yes, and she said it was very hard to pin down, but it's a very important concept for thinking about the impact of monetary policy. Now, a neutral...
I knew it. Here it comes. Go for it.
A neutral rate means monetary policy is neither supporting or detracting from growth. Everything is in balance. The central bank has lifted the official cash rate from 0.1% to 2.6%, the fastest tightening pace in history, and people are wondering whether or not it's getting close to neutral. Now, Ms. Ellis said there's now some positive probability that the bank isn't stimulating the economy, and I'll go into a quote, but I wouldn't put that probability at 100% just yet. Now, that is a quote for the economists out there, without a doubt. I think she said that the bank isn't at neutral yet. We've still got a little way to go, but I'm not 100% sure.
That is a fantastic quote, isn't it?
Sure is.
All right. Now, we mentioned this one at the top of the show, Sean. Australia's Fat Cat and Fit Cat super funds have been revealed. Investment advisor StockSpot has ranked super funds, including fees and performance.
And a bunch of OnePath funds, which used to be owned by ANZ but are now owned by Insignia Financial, are among the worst performers, while the Qantas Corporate Fund is the best. As is usual, retail funds dominate StockSpot's list of Fat Cat funds. They're the bad ones, high fees with relatively poor performance. Apart from OnePath, funds from AMP, Colonial First State and Clearview performed poorly. In the Fit Cat category, don't get that wrong, Qantas came out on top, and UniSuper, Hester, Australian Super, and in fact one of the Insignia Financial funds also were on that list. Certainly worth checking that list out if you have a superannuation account, which most of us of course do, to see where your fund fits in.
Indeed. Now, almost 200,000 people who spent years fighting to clear welfare debts that they didn't owe will have any active Centrelink investigations wiped.
Yes, the federal government will scrap the cases of robo-debt victims still under review, with any potential debt no longer being pursued, according to the Financial Review. The unlawful debt recovery scheme started in 2015 and falsely accused welfare recipients of owing money to the government. More than $750 million was wrongfully recovered from 381,000 people. The cases were put on hold in 2019 after concerns were raised about the robo-debt scheme. Social Services Minister Amanda Rishworth yesterday said clearing the outstanding cases would offer certainty to any Australians with reviews hanging over their heads. Now, a royal commission into the robo-debt scheme is due to begin later this month.
Sean, in New South Wales, the state government has introduced a bill which would give first home buyers a choice between paying an annual land tax or a lump sum stamp duty up front.
And every other state will be watching very closely to see what happens. Pretty much everyone agrees stamp duty on home purchases is a big disincentive and a bad tax. But it raises plenty of money. The New South Wales government is trying to change the system gradually, and under an opt-in policy, buyers of homes under $1.5 million will have the option to pay either the land tax, the annual land tax, or the lump sum stamp duty. The government wants the trial to begin early next year, and in the 24 hours since the policy was announced, some 10,000 people had accessed a calculator which checks whether first home buyers will be better off paying land tax or stamp duty. Be a really interesting one to watch.
Australia has launched its new corporate logo, Ruby the Roo in Tokyo was part of a worldwide campaign to attract international visitors.
Yeah. Look, Trade and Tourism Minister Don Farrell called Ruby the new Paul Hogan. I wonder what Paul Hogan thinks of that.
Yeah, so it might be a little bit of an overreach, I reckon.
Possibly. Mr. Farrell said parts of the country, notably far north Queensland, the Gold Coast and the capital cities, have been hit hard by the lack of visitors during COVID. Ruby's job is to convince all those people to come back again.
And finally, Sean, in sport, players from Russia and Belarus will be able to compete at the 2023 Australian Tennis Open.
Yes, but they won't be allowed to compete under their country's flags. Instead, it will be more like what happens in the Olympics with Russia. Wimbledon banned the players a couple of months ago. Now, the Melbourne event, which starts in late January, has been a magnet for controversy recently, with number one player in the world, Novak Djokovic, sent home earlier this year under COVID protocols. Australian Open director Craig Tiley said whether Djokovic, the nine-time champion, plays next year is up to the federal government.
All right, moving on to overseas news. And Sean, you actually mentioned this earlier in the show. COVID cases in China are growing and testing has been ramped up.
Shanghai, Shenzhen and other big cities have increased testing ahead of the People's National Congress, which starts this weekend. Infections surged following the Golden Week holiday in hopes that Beijing will relax its zero-tolerance policy seem to have been dashed after the state-controlled People's Daily urged China to stick with its policy. It said a large-scale rebound in cases will have a serious impact on economic and social development.
Sean, there's been a big deal in the uranium sector, which kind of highlights how the once scorned energy source is gaining new interest.
Yes, Canadian uranium company Cameco and Toronto-based Brookfield Renewable Partners will acquire nuclear power plant equipment maker Westinghouse Electric in a $7.9 billion deal, including debt. Lots of words there, right? But this just shows how much more interest there is in nuclear power at the moment. And it shows that investors think nuclear will be part of the energy solution going forward. Of course, aiding that theory is the war in Europe and the energy crisis that's going on. Certainly some of the local uranium stocks have done okay in recent times as a result of this renewed interest in uranium.
All right, finally, Sean, the story that I think everyone's waiting for. NASA's mission to nudge a distant asteroid off course has succeeded, showcasing really a potential new method for saving Earth from dangerous space rocks.
Michael, very much your story, this one. Now, the spacecraft, which is about the size of a refrigerator, slammed into an asteroid called Dimorphos at 14,000 miles per hour on September 26. We spoke about it back then. Dimorphos is roughly the size of a football stadium. The momentum from the impact, combined with the recoil of the ejected particles the collision created, helped to substantially alter Dimorphos's path through space. The theory being, if we ever detect an asteroid heading to Earth, we can now push it off its path.
What I love about this, Sean, is that scientists had predicted that the impact would change the orbit by kind of at least 10 minutes, but they would have actually considered even just 73 seconds to be a success. Instead, they managed to change the orbit by 32 minutes. I would say that is a resounding success.
Yes, I'd agree. I love the fact that you know that off the top of your head.
Oh, I read everything I can about this. I think this is fascinating. And I will just say that this only cost $330 million US. Is
that a bargain for 32 minutes?
That's about $500 million Australian.
Yeah.
And that's a $500 million insurance policy for Earth. That is a good deal.
Yeah.
All right. Up next is the Fear and Greed Daily interview. Chris Breike from StockSpot's your guest today.
Yes, as we mentioned earlier in the show, it's all about fat cats and fit cats in the super sector. The funds that are doing well and the funds that aren't doing well. Definitely worth a listen.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 13th of October, 2022. Make sure you're following the podcast. Join us online on LinkedIn, on Instagram, Twitter, and Facebook. And don't forget to check out our new podcast, How Do They Afford That? The link is in the show notes, and you can find it wherever you listen to podcasts. I'm Michael Thompson, and that was Fear and Greed. Have a great day.